Hi traders, welcome to the video. Please pause the video and make sure you understand the disclaimer before proceeding. Hi traders, Anthony here. I'm just taking a look at the S&P 500. This is the E-mini futures chart on TradingView, 4-hour time frame. I'll just go out and show you what I've got marked up here on the daily. This imbalance up here, we see this thin candle. I would think the market is going to look to fill this gap at some stage. So this is definitely something to be mindful of with this chart. We are starting to grind up here. So whether it rolls over and we continue south or it grinds up and it looks to fill this remains to be seen. I mean, we can pull a fib. It comes into play with my my yellow zone through here. Retrace. Kind of makes sense. I'm always looking for opportunities. I'm not investing in the stock markets at the moment, but I am definitely day trading. I'll do that to generate income. So I'm looking for an opportunity to get involved here. So we'll go down to the 4-hour and just keep these levels in mind as we go down to the lower time frames. Point of interest here, this high, and we've also got this POC level, point of control, through here. This range back through here that runs through. So this is what we've traded into now. Retested this level now, rolling over. This price action, okay, we've had I'll go down to the lower time frame and I'll show you what I'm seeing here. Say, have a look at it on the hourly, see what it looks like. We've got this slightly wicked through here. So, I mean, I'm always looking at this type of price action where in a lot of cases you'll get a double bottom and then you'll get a third go at it and it'll wick down through. I could mark that up actually. I've got a thing for this. There it is, liquidity pool. And when you start to see the market ranging like this, it's building liquidity above and below. Traps traders short, moves up and then rolls over again, traps traders short. And then we get this build-up of liquidity. The market's going to be looking for two things. It's looking for liquidity above here. These short traders, buy-side liquidity, stop losses. And then it's going to look to fill gaps. And so we've got that above. Liquidity again, all down through here. We have stop losses galore. So, I mean, that's right for the picking for this to trade back into. Up into these ranges up here in these levels. If smart money's looking to tank this, ultimately they're going to need, to pull up into here to give them the liquidity they need to trade it short, in my opinion. Then again, I mean, it can grind down, it can kind of trade down, pull back. It can do that as well. I don't want to ramble on, but this gap is important. That's why I've got it marked up on my chart. So at the moment, if you're looking for like a day trade opportunity, well, here's a pullback. Let's just pull a fib, low to high. I wouldn't be getting involved unless I see this. I mean, we've got this level back down here. Okay, so pull back down into this range here could get me interested, possibly, if we see that, for an opportunity to buy. And then you're going to want to wait for this to invite you in. So if it does trade back down, the kind of price action I'll be looking for will be, if we go down to, say, a 5-minute, like up here, for example. See how you get this range. All right, I'm looking for, well, I'll just pull that through there. You get this range. So I'm going to be looking, and the range will set up liquidity above and below. And I'm going to be looking for the break, so break of structure. In this case, a short opportunity happened here. Break and retest. See, that's your point of entry right there to short this. That's conservative. Being aggressive, this break of structure here. Okay, so and we can look at the opposite of this for a bullish opportunity. So this is how I kind of read the market. So we've got this break of structure here on the lower time frame and this lower high. See how we've got slightly lower low, lower high. That's potentially when you see this rolling over. See how it's got this, we have this thin candle through here, right? Imbalance. So that's what I'm looking for on the lower time frame for entry. It's this price action. It's where you see, generally you'll get relative equal highs. That was a little bit kind of different, but generally you'll see relative equal highs and then it'll wick back into liquidity and then you'll get this lower high setup. That's generally what I'm looking for. Like you get that, it wicks back up and then you get a lower high setup here, this break of structure. Hope I'm not being too pedantic, but that's the sort of price. It's not a head and shoulders, it's not a this or that, it's this. It's I call it a fake out, shake out. But that's the sort of thing I'm looking for. And then this here is my entry point, and I'll be looking for the same on, like if this is trading down, there's nothing here at the moment, right? But if we get, let's just say, and you mark up your key points, your points of interest where you've got support and resistance. I want to see the market trade down. Okay, I want to see it ranging, however it does that. And for a buy opportunity, I'm going to want to see something like that, okay, where we get these relative equal lows, a dip into liquidity, and then we get the opportunity as this starts to trade up. So that's what I'm looking for. My rules of engagement with a reversal. What else can I say about this, guys? I mean, it's trading down. Yeah, there could be an opportunity to get in there long. And, I think what's most important is to wait for the setup, especially if you're day trading or intraday trading. Wait for the setup on the lower time frame. Now we've got a bit of a pullback here, but again, you go down to the lower time frame and wait for this price action to invite you in. That's the kind of thing I'm looking for. And just on a final note, see, we've got this support level through here. I would be more inclined to set this level down here as my point of interest. The range prior to this impulsive move. Okay, we have this thin candle and the market's now coming back to look to rebalance. So we've got this gap through here, okay, coming in to fill the gap. I'm more interested in this level down here to see how it trades around here. That's the 30-minute, and then obviously we'd go out to the hourly and just have a look and see what that looks like. That kind of stacks up. I'll just mark that up, gap, so we can differentiate between these things. This is my point of interest here, really, on the hourly chart. And you could mark that up as an hourly level, 1 hour, 1H, and then I'll go out to a 4 hour, and then when this trades into this level, I'm looking for the setup that I mentioned earlier, and then we'll pick it up. Now on the 4 hour, see, it's down here, bit of a different story, right? So just be careful, because this could look to fill this gap through here down to the 4 hour as well. So I'll be watching how this trades here to see if we get the setup, and if it doesn't happen here and it grinds through, then it'll be down here. Hope that makes sense. Anyway, I'll mark that up, call it a 4 hour. So that's how I look for my opportunities. I've got indicators that help me. I won't go into that. Have a look at the link in the description below the video, and you can check out my indicators and my breakout strategy. With that, guys, I hope you have a great day, safe trading, and I'll see you in the next video.